Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to see what's going on with Twitter in terms of commodities and finance and all that information that people are sharing. And obviously, I'm going to interject my financial opinions in there. Again, if you want to follow me, you can follow me at finding_finance. And if you want to see the website, you can go to finding-value.com and become a platinum member. So, we got Nick Sleep is one of the best investors you've never heard of. People who invested with him achieved a yearly return of about 21%. So here's 7 lessons from him, and let's see what we can learn from him. He says, focus on the long term. The key to successful investing is to focus on the long term. Look for companies with strong fundamentals and hold them for years, if not decades. Look for businesses with a competitive advantage. A moat is essential for quality investors. And guys, when they talk about long-term holding, they're talking like 10 plus years in companies that are not commodity companies. Commodity companies are cyclicals, and they have to be held during certain periods of time. I think what they're talking about is like these really long-term holding periods, like 20, 30 years over multiple business cycles. And they go after these companies that basically you need a moat because that's what's going to protect you. They're generally non-technology driven companies because technology companies basically get replaced quite often. So they generally go and look for like boring companies that don't change. Their business model's roughly the same, their products are roughly the same, and they just sell more based off volume. Think of like Campbell's Soup. Think of Chipotle or drinks and eating insurance companies, banks, like those types of things. It says, don't worry about the short-term market fluctuations. Ignore short-term market fluctuations and focus on the long-term potential of a company. Over time, the stock price will always follow the intrinsic value of the company. Invest in companies with high return on invested capital. Capital allocation is the most important task of management. A high and consistent ROIC tells you the company's allocating capital efficiently. Be patient. If you're patient, investment opportunities will come your way. Successful investing requires patience and discipline. Keep an open mind. Investors should be willing to learn every single day, adapt to new information when it becomes available. Focus on the quality of management. You want to invest in companies run by great people. By investing in companies with the skin in the game, you improve your chances to outperform the market. And that's, I guess, Nick Sleep right there. Pretty cool, pretty straightforward. Pretty much the same as Buffett and a lot of these other guys, I would say. Here's Marion Kusely. It says, the gold awakening. It says, what's about to unfold in the global financial markets could become the golden bull market of the century. We predict that millions of investors will flock to precious metals in search of a safe haven, driving the price of gold to levels never seen before. So here are a couple of periods of time. We've got 30 to 34, this blue line on the bottom. We've got 70 to 74. We got 76 to 80. And we got 2000 to 2012. That was a big boy there. And then we've got the current 2015 to current market going, and that's where we're at right now. I guess he's expecting a large move to the upside. He says central banks will scramble to increase their gold reserves as they are doing, while ordinary citizens will turn to the yellow metal as a hedge against the eroding value of their hard-earned money. But you'll be ahead of the game. As you'll discover, there is nothing surprising at all about the coming gold boom. In fact, it's been many years in the making. The stage has been set for a massive shift in global wealth, and those who recognize the signs early will stand to profit immensely. Not the mainstream media, not your financial advisors. No one is going to tell you what you need to know to protect yourself, grow your wealth, and seize the once-in-a-lifetime opportunity. That's why I urge you to take a moment and breathe. Before the golden bull market that's about to take the world by storm, while the rest of the world scrambles to catch up, you'll already be reaping the rewards. These same forces are at work across the globe, putting everyone's financial future at risk. It points to a major shift in the way we invest, save, and provide for safety of our families. It's important for you to know what's going to happen. And then he has a full piece here. I do agree, though. I do think we could potentially see a pretty big bull market in gold, and I think the market conditions are ramping up for that to happen. Market conditions are your interest rates. The curve is very inverted right now, and it could also uninvert. And I'll show you some signs of what that looks like. The 10-year Treasury note price is on the verge of breaking out of the double bottom low. When it does, the gold price in short order will make new all-time highs as it enters the transition phase on its way to its next consolidation level. So he's saying the 10-year note price is putting in a double bottom. And it does look like that, where we could potentially move higher. What that means is bond prices move up, bond yields go lower. And that's the inversion of the yield curve uninverting. And this is what the beginning stages of that looks like, which means perhaps a crisis is coming. We've got Pierre Andarand. He says, update on oil spec positioning with today's COT data. WTI, Brent, gas oil, gasoline, heating oil, futures and options delta. Lowest since the data is available in 2011. Very few people are trading all of those futures data. So very low in terms of that. We've got gold. Gold is, so he's got it as a gigantic flag pattern. Some people see it as a cup and handle pattern. Either way, we did break out here, and it looks like it's ready to roll on higher for gold. And I'm not saying every single day will be higher. It's just saying that the path of least resistance has been broken, and it's upward, not downward. So this is what I was talking about, yields dropping. It says policy failure at the Federal Reserve. The 2-year yield has dropped another 60 basis points since Jay Powell's hawkish 25 basis point hike and continued to focus on inflation. That's a huge move. And we're probably going to come back up, and then we're going to roll back over, is my guess. And that is yields. That's the short end of the yield curve dropping like a rock, which means there could be problems in the system. It says American households will be net sellers of $750 billion in stocks this year, which will be the first annual drop in demand since 2018 and the largest since 2008. There's your drop. 750 billion negative and 500 billion is estimated in 2024, and that's what is estimated in 2023. Much like the drops here, hopefully that money finds its way over to precious metals and or commodities. The new golden decade has started. Gold versus the Dow, and you can see we are breaking to the upside here for gold versus the Dow. I usually view this as Dow to gold ratio, which is inverted the opposite direction. It says, forget about refilling the U.S. SPR. Get ready for another 26 million barrels to be sold over the next 2 months. Also, Energy Secretary Granholm said it would be difficult to take advantage of low prices this year. Lots of laughs. It says the Energy Department said last month it is moving forward with the sale of 26 million barrels from the SPR that was mandated by Congress in earlier years to help fund the federal budget. So here's gold to stock ratio. That's also moving up against the S&P 500. It's at a pretty good ratio for gold. We've got silver eagles now up to an average of 60% premium to spot. Almost impossible to source them for less than $36 an ounce. Physical demand is on fire and dealers are running out of stock. Hearing U.S. Mint is actively trying to source overseas due to shortages in the United States. And that's for the silver squeeze. Now, I used to buy these things for like $17 an ounce in 2018, the silver eagles. And that was like $2.99 over spot, if I can remember. So spot was like $14, $15, something like that. Here's copper. It says amount needed to achieve net zero over the next 27 years. Twice as much copper will be needed to be produced than has ever been over the last 3,000 years. This is what new copper needed to reach net zero by 2050. I don't think that amount of copper exists in the world. I mean, maybe it does, but that's a lot of copper, and it's more than what we've done in the last, basically as humans have been alive. It says deposits at U.S. banks posted biggest decline in nearly a year during week when multiple bank failures triggered the latest bout of global financial turmoil. Bank deposits fell by 99 billion to 17.5 trillion in the week ending March 15th. And there's your decline in deposits. It says current market expectations for the path of the Fed funds rate. So May 3rd was a pause. June 14th, 25 basis point cut, a pause in November, and then another 25. So we actually are peaking potentially in our Fed funds rate, a pause of 2023, and then we're going to come back down. That's what the market expectations are, at least. It says, let's see if Powell and Yellen can fix this with interest rate hikes. It says, we are heading towards a train wreck, and Robert Friedland is a pretty well-known investor billionaire. It says, global copper stockpiles will deplete by August if the present trend continues. This is the present trend right here. Current demand, Goldman Sachs forecast for copper. Let's run this baby into zero land for inventory. Grady says, retail's nowhere to be seen yet in this commodities bull market. Don't listen to the naysayers, especially not in the markets. The majority has to be wrong, not only in the markets. So do pat yourself on the back instead of questioning yourself. You are very early. I do like that, words of encouragement. I'm going to end there, guys. You can tell I've got a stuffy nose a little bit, and my voice is a little bit impacted, but that's all I've got. That's all I've got to share. Hopefully you guys stay positive in these markets. Gold is looking really good. Gold's looking really good. It's looking real juicy. The GDX to whatever other ETF, the ratios look really good as well. So that is a spot I'll be looking. We'll be digging at digging through some companies. I'll give you my opinions around the ones I like. I'm pretty simple. I'll just say that. And I'll cover that during the 5 p.m. Mountain Standard Time Platinum question and answer session that we're having Sunday. We'll see you there. So that's what I've got for today, guys. We'll catch you next time. Give me a thumb up for the content. Subscribe to the channel. Check out the website if you like. And we'll see you next time. This is Finding Value.